Shanghai Automotive Group Company, Limited, SAIC, saw a significant decline in revenue and net profit in the first 3 quarters of last year. Entering 2023, it once again encountered a sharp drop in overall vehicle sales in the first quarter, as well as rumors of pay cuts and layoffs. Recently, SAIC has been rumored to cut salaries for all employees, with executives being reduced by 20%, department heads by 15%, and employees by 10%. Even newly hired graduates who have been with the company for less than a year may face pay cuts and layoffs in SAIC's Research and Development Institute. Several sources close to SAIC Group have confirmed to Gemian News that there has been an announcement of an impending salary reduction, but it has not yet been officially implemented. Another source revealed that in addition to the salary reduction, SAIC will also implement performance assessments, and if employees fail to meet the standards, their salary reduction may be even higher. Furthermore, multiple SAIC insiders have disclosed that there may be a disguised layoff of workers, and managers at the senior level or above will be given the option to buy out their years of service. However, an insider in the automotive industry told the Southern Metropolis Daily that in the past 2 years, due to the fierce competition in the automotive industry, some new energy vehicle companies have been offering high salaries to poach employees. To retain their employees, SAIC has also been forced to raise salaries, leading to a slight increase in personnel costs. On April 7, regarding the rumors of pay cuts and layoffs, SAIC Passenger Vehicle Division stated to Huangxing Capital that they had not received any such news. However, an industry insider told Southern Metropolis Daily that over the past 2 years, due to intense competition in the automotive industry, some new energy vehicle companies have offered high salaries to attract employees, and SAIC has also been forced to increase salaries in order to retain employees, resulting in a slight increase in labor costs. As early as late February, SAIC GM was rumored to have plans for layoffs. SAIC GM responded to the news on its WeChat official account, stating that there were no plans for layoffs and that the company was preparing to offer buyouts to employees aged 45 and above in response to the impact of declining sales. SAIC Group is one of the 4 largest automobile manufacturers in China, and is under the management of the Shanghai State-Owned Assets Supervision and Administration Commission. Its major vehicle companies include passenger car companies, ROH and MG, SAIC Maxus, SAIC Volkswagen, SAIC GM Wuling, Nanjing Iveco, SAIC Iveco Hongyan, and Shanghai Sunwin. In terms of performance, SAIC Group will release its 2022 annual report on April 29. However, based on the first 3 quarters of 2022, both the revenue and net profit of SAIC Group have decreased. In the first 3 quarters of 2022, SAIC Group's total revenue was 527.409 billion Chinese yuan, a year-on-year decrease of 4.58%. The net profit was 12.649 billion Chinese yuan, a year-on-year decrease of 37.84%, the lowest level since 2011. In terms of sales, over 70% of SAIC Group's sales come from its joint venture segment, and when the joint ventures thrive, SAIC thrives. However, the performance of SAIC's core joint ventures has been disappointing. In 2022, SAIC Group sold 5.3026 million vehicles, a year-on-year decrease of 2.94%, marking the 4th consecutive year of negative growth. Among them, SAIC GM's annual sales volume decreased by 12.13% year-on-year, accounting for 22.07% of SAIC Group's sales. SAIC Volkswagen's sales volume increased by 6.35% year-on-year, accounting for 24.91% of the group's sales. SAIC Passenger Vehicles sales volume increased by 4.8% year-on-year, accounting for 15.83% of the group's sales, and SAIC GM Wuling's sales volume decreased by 3.62% year-on-year, accounting for 30.17% of the group's sales. Entering 2023, SAIC Group has encountered a difficult start. In the first 3 months of the year, SAIC Group's cumulative vehicle sales amounted to 891,200 units, a year-on-year decrease of 26.99%. Among them, SAIC Volkswagen's sales volume decreased by 31.67% year-on-year, SAIC GM's decreased by 32.36%, SAIC GM Wuling's decreased by 40.96%, while SAIC Passenger Vehicles sales volume increased by 1.17% year-on-year. SAIC Group's cell phone new energy vehicle brand, which has been highly anticipated, has not been able to gain traction. In 2022, Digi Auto sold a total of 4,811 vehicles, while Faifan Auto's annual sales volume was 14,532 vehicles. In the first 3 months of 2023, Digi Auto's cumulative sales volume was 3,765 vehicles, with 2,007 vehicles sold in March. Fan Auto's sales volume was only 250 vehicles in January and further dropped to 68 vehicles in February. In terms of stock price, SAIC Group's stock price fell by 30.15% in 2022, while the Shanghai Stock Exchange Composite Index fell by 15.13%, and the passenger car sector fell by 38.58%. On April 6, the China Association of Automobile Manufacturers released an overview of the auto market, stating that the cumulative retail sales for this year were 4.275 million vehicles, a year-on-year decrease of 13%. The cumulative wholesale sales were 5.021 million vehicles, a year-on-year decrease of 8%. Buffett sells BYD stocks for the 10th time. On April 11, it was reported that Warren Buffett's investment company, Berkshire Hathaway, sold more shares of Chinese electric vehicle leader, BYD. According to data from the Hong Kong Stock Exchange, Berkshire Hathaway reduced its stake in BYD's H shares to 10.90%, down from 11.13% previously. On March 31, it sold 2.48 million shares of BYD's H shares. It should be noted that, according to disclosure rules on the Hong Kong Stock Exchange, major shareholders are only required to disclose changes in their holdings when it crosses a certain integer percentage. Based on the disclosed information, Berkshire Hathaway has sold shares of BYD multiple times in addition to the latest reduction. Prior to the latest sale, the company held 11.87% of BYD's shares after a reduction in February, and subsequently continued to reduce its holdings to 11.13% before triggering the disclosure requirement by reducing its stake to 10.9%. In 2008, Berkshire Hathaway, owned by Warren Buffett, purchased a 10% stake in BYD for a total price of 1.8 billion Hong Kong dollars, at a price of 8 Hong Kong dollars per share, becoming BYD's largest foreign shareholder at the time. According to information on the Hong Kong Stock Exchange website, Berkshire Hathaway, which had held shares in BYD for 14 years, has initiated 10 consecutive reductions in its holdings of BYD's H shares since its first reduction on August 24, 2022. As a result, its stake in the company has decreased from 19.92% on August 24, 2022 to the current 10.9%. In terms of recent stock performance, BYD's share price has fallen by a total of 7% since February.